Hong Kong dollar. The Hong Kong dollar is the official currency of Hong Kong, a special administrative region of China. It is represented by the symbol HK dollar and is subdivided into 100 cents. The Hong Kong Monetary Authority is the government authority responsible for issuing the currency and maintaining its stability. The Hong Kong dollar has been in use since 1841 when it replaced the various foreign currencies that were used in the region at the time. The Hong Kong dollar is pegged to the United States dollar through a currency board system, also known as a linked exchange rate system, which was established in 1983. The peg currently maintains the exchange rate at around 7 Hong Kong dollars and 80 cents to $1, but it is allowed to fluctuate within a narrow range. Banknotes and coins in circulation come in various denominations. Coins include 10 cents, 20 cents, 50 cents, $1, $2, $5, and $10. Banknotes are available in denominations of 10, 20, 50, 100, 500, and $1,000. Banknotes are issued by 3 banks in Hong Kong: HSBC, Bank of China, Hong Kong, and Standard Chartered Bank. As a major international financial center, Hong Kong has a highly developed and sophisticated financial system. The Hong Kong dollar is widely used for trade and investment purposes, and it is also one of the most traded currencies in the world. The linked exchange rate system has been implemented in Hong Kong since October 17, 1983. Through a rigorous, robust, and transparent currency board system, the LERS ensures that the Hong Kong dollar exchange rate remains stable within a band of HK dollars 7.75-7.85 to $1. The LERS is the cornerstone of Hong Kong's monetary and financial stability. It has weathered many economic cycles and has proved highly resilient in the face of regional and global financial crises over the years. The linked exchange rate system is a type of currency board arrangement that pegs the value of a currency to another, more stable currency. It was implemented in Hong Kong in 1983 to maintain the stability of the Hong Kong dollar by linking its value to the United States dollar. The LERS is managed by the Hong Kong Monetary Authority, the de facto central bank of the Special Administrative Region. Under the LERS, the exchange rate between the Hong Kong dollar and the US dollar is maintained within a narrow trading band. The system currently sets the exchange rate at approximately 7 Hong Kong dollars and 80 cents to $1, with an allowable fluctuation range between 7.75 and 7 Hong Kong dollars and 85 cents to $1. The Hong Kong Monetary Authority is committed to maintaining this peg by adjusting its monetary policies and managing its foreign exchange reserves. The primary objectives of the LERS are to maintain currency stability, ensure public confidence in the Hong Kong. To maintain the peg, the HKMA follows a few key principles. Currency Board. Under the LERS, the HKMA must hold sufficient foreign exchange reserves, primarily in USD, to cover the entire monetary base of Hong Kong dollars in circulation. This ensures that there is a one-to-one backing of the Hong Kong dollar with US dollars at the fixed exchange rate. Automatic adjustments. The LERS operates under a set of predefined rules that automatically adjust the supply of Hong Kong dollars in response to market demand. When demand for HKD increases, the HKMA sells USD and buys HKD, which increases the supply of HKD and stabilizes the exchange rate. Conversely, when demand for HKD decreases, the HKMA sells HKD and buys USD, which reduces the supply of HKD and stabilizes the exchange rate. Interest rate adjustments. To maintain the stability of the peg, interest rates in Hong Kong are influenced by those in the United States. If the interest rate in the US increases, capital tends to flow out of Hong Kong, putting downward pressure on the HKD. To counter this, the HKMA will raise interest rates in Hong Kong, attracting capital inflows and stabilizing the exchange rate. The linked exchange rate system has been a key factor in maintaining Hong Kong's status as a global financial center and providing a stable environment for trade and investment. Profiting from the Hong Kong dollar and the linked exchange rate system can be challenging due to the stability of the HKD against the USD. However, there are still some opportunities for investors and traders to potentially benefit from the system. Here are a few strategies to consider. Carry trade. In a carry trade, An investor borrows in a low interest rate currency and invests in a high interest rate currency to earn the interest rate differential. When there is a significant interest rate differential between the Hong Kong dollar and the US dollar, investors can potentially profit from this strategy. However, the effectiveness of the carry trade can be impacted by fluctuations in exchange rates and interest rate differentials. Arbitrage. Arbitrage opportunities can occasionally arise when the HKD to USD exchange rate moves outside the designated trading band, 7.75 to 7.85. In such situations, investors can potentially profit by buying the undervalued currency and selling the overvalued one. However, these opportunities are usually short-lived, as the HKMA will intervene to bring the exchange rate back within the band. Investing in Hong Kong assets. Investors can potentially profit from the stability of the Hong Kong dollar by investing in Hong Kong assets, such as stocks, bonds, or real estate. The stable currency environment can make these investments more attractive to international investors, as they face lower currency risk. However, investors should still carefully consider other factors, such as market conditions and asset valuations, before making any investments. Diversification. Investors can use the stable HKD as a diversification tool in their portfolios, as it may help reduce currency risk when investing in other assets. By holding some investments denominated in HKD, investors can mitigate the impact of currency fluctuations on their overall portfolio performance. Keep in mind that investing and trading always carry risks, and there is no guaranteed way to profit from the Hong Kong dollar or the LERS. It is essential to conduct thorough research, understand the risks involved, and consult with a financial advisor if necessary before making any investment decisions.